Hello, and welcome to the Be Formless, Flow Driven CEO and VC podcast, where we are reshaping life, leadership, business, and investing from the inside out. And I am welcoming to the show Paul Anthony Claxton. Welcome to the show, Paul.
Thank you for having me.
This is like our sixth time, I think, maybe. I'm probably exaggerating that, Paul, but we have tried a few times to connect on the pod, and I'm thrilled to have you here. So thank you for coming on the show, and a big shout out to all the
Absolutely.
listeners. Hi, everybody.
Yes, we've made a valiant effort at putting this show together for all you listeners, and so we're gonna be delivering some very valuable content for you.
I love that. I love that you
And
share very, very valuable content, and happy Thursday evening for you. It is early Friday morning here, so there's always good vibes when it comes towards the end of the week. Paul and I would just say to each other, what did you say? I loved it. You said it feels like you are in quicksand, or it's just everything just feels so fast right now. Is that what you said? Quicksand? Was it quicksand?
quicksand,
Yeah.
sand, yeah.
Yeah.
Well,
Just
AI has made it's made me much more efficient, professionally, but it hasn't given me any more time. Because it's made me more efficient. I can just do stuff faster, but I can do more stuff. So I don't get any time out of it.
we
I
can
just
talk
do
about that
I just do more stuff.
Yeah, totally right. And I think that's the
Yeah.
thing. We're all very tired. Let's get on into it, Paul, because I'm sure this is going to come up in our conversation, especially with everything that you're focused on. You are the founder and general partner of Digerati Investments, managing partner of Reciprocity ROI. I didn't get that right. Can
There
you
you
please
go.
say that
Yeah.
again?
Reciprocity, yes.
Reciprocity. And quick little fun fact. Paul has family in Perth and Sydney, and I had no idea until you mentioned it in an email the other day. So I always love that there's always this 6 degrees of separation. So Paul, you operate at the intersection of venture capital, capital markets, strategy, founder readiness, and institutional diligence. And I think diligence is something that I really want to explore with you today, because especially when we're just talking about time. You're a former United States Marine and combat veteran, and you bring a pressure-tested view of leadership, accountability, discipline, and execution in the private markets. Your military background shaped how you evaluate people, systems, risk, and decision-making under pressure, all of which now inform how you approach venture investing and company building. As founder and general partner of Digerati Investments, you focus on AI native companies at the seed and Series A stages, and your investment philosophy is built around disciplined diligence, structured capital deployment, and founder alignment. It's not around all the, and I keep using this word hype, but there's a lot of things that feel very hypey right now. It's like we need to calm down the hype, shortcuts, or performative fundraising. Through Reciprocity ROI, you serve as managing partner and also help companies strengthen their capital strategy, diligence, posture, investor readiness, and path to institutional financing. One other little bit, your work challenges the transactional nature of modern venture capital. You believe capital should not simply chase momentum. It should be exposed risk, force clarity, and help companies build the infrastructure required to survive the pressure. Your perspective centers on whether founders, investors, and operators are aligned around the same reality before capital is deployed. And at the core of your thinking is a blunt and necessary question. Are we building companies that can actually endure, or just financing narratives that look good until the pressure hits? When you booked in for the pod and I asked you what's one unique insight or lived experience that you've reshaped when it comes to life, leadership, business, and or investing, you said, I've reshaped how capital gets deployed and controlled by building a model that forces discipline back into venture. You align the founders, investors, operators around structured accountability. You said not height, and companies are actually built to survive, scale, and return capital. I'm going to hand it over to you because you've got quite the background, quite the story.
Yeah, it's quite a story. Sometimes I don't even know where to start. Maybe I'll start with like how I fell in venture capital, and I think life takes us to some of our greatest destinations that are not usually they're not pre-planned. You know, So, being a Marine for 10 years, and then thinking that corporate was the right path for me. That when you're in it, then you know how the water feels, you know. But and everyone can tell you how the water feels, but you never know for yourself. Like, people perceive and feel temperatures differently. So, when I spent some time in corporate, I felt that temperature differently, and it wasn't for me. So in 2016, I became an entrepreneur, and I built my reputation in my work through sales and marketing, but really at the core of sales and marketing is relationships, you
Mm,
know, and being a true economist, like a true business person is an economist. They're a business, a true business person understands economic philosophy, economy and how markets integrate with each other, both at national and international scale. So, being a student of that, and then really putting relationships first and foremost, I started getting introductions all over the place. So my first, well, one of my clients was a VC firm, and that's how I got into VC. But I got into VC, um, through a client relationship.
mm,
But my mentality was I'm going to learn everything that I can from this client,
yeah.
and one day I'm gonna start my own firm because I believe capital is what really moves and drives change, and we policy drives change to an extent, but without capital behind it, policy doesn't really take effect. So capital is what helps drive policy and change. And a lot of the change that we're seeing with AI and how it's think about how AI has changed your life in the past several years. You know, Open AI being at the center, at the nucleus of that, and look at how much capital has been ingested into Open AI.
Mm,
So, and all our lives have changed as a result. So, I think follow the capital, and we can really begin to see where we all fit into the human race.
mm. How conscious do you think capital is right now? Like, I like to think about conscious capital, and capital makes the world go around. There's a lot of power struggles. There's a lot of power plays, if you like, at the moment. And, even when you think about, you've talked around open AI and then there's Claude. And I listened to a fascinating podcast from the founders of Claude the other day. I don't know if you've heard it. It's a great one. And for the listeners as well, just what they talk around and, what they're building with Anthropic, etc. Does that come up for you? Because you've called out relationships, Paul, and, you said that relationships is everything. Like, I believe that relationships, need to be, they can't just be transactional. I'm not a transactional type of a person. They need to be relational. That's why they're called relationships. It's a value exchange. Do you believe the same when it comes to capital? Like, is there a role for conscious capital in your world and what you're seeing as well?
Yeah, I think there is. Um, I call it. I don't call it conscious capital, but in semantical terms, um, I call it money with muscle. Which is a form of conscious. It's just another way of explaining conscious capital. Um, but I think there's a I think there's a needs gap, um, with regards to how capital is sourced and deployed, between those that are building technologies, and those that have the capital, right? So me, being an investor, I run across founders all the time, and I think that needs gap is pervasive, um, and is first and foremost, um, just a lack of understanding within the founder community in terms of how capital can be useful,
Mm,
or conscious, or have muscle. Um, and they're looking for this capital. A lot of founders early stage are looking for capital. They think that is what
Is
they
it?
need.
Mm.
But it's really a paradigm shift. It's a matter of understanding, which I feel is lacking. And then on the allocator
Sorry, Paul,
side,
sorry, Paul, just can we just go a little bit deeper into that for a second, just with the audience? Because I think it's a really interesting point that you're calling out there. You say there's a real needs gap. And, it's almost like there's and I could be wrong here, but I feel like what you're also talking about is this quite often founders are looking for that instant gratification, the instant hit, the instant injection of capital, because I think that's going to give them all the answers. Like there's days when I feel like that myself as someone who's
yeah.
bootstrapping, like, oh gosh, I just need the money now.
Hmm.
However, that's not necessarily the answer, and it's not the long-term game. When you talk about what you're talking about in terms of the needs gap, what are you doing with your founders to essentially upskill them, if you like, to get them to understand this gap? Like, or are you working with them on that? Like, you said you see it a lot. How do you address that with the founders that you interact with or you have relationships with?
So it's a matter of getting founders to understand. Um, Number one, a lot of founders are raising capital and they probably should not be raising capital. They don't understand the game that they're playing, and generally speaking, the odds are not in their favor. Um, and so I try to work with founders to position them so that the odds can be in their favor, right? It's almost like a chess game, right? But you don't bring your if you've ever played chess, and you don't bring your rook or your knight or your queen out. You don't bring your most powerful pieces out right away. Um, and I think I see a lot of founders bringing out their most powerful piece right away just to raise capital, and their most powerful piece is the cap table, you
Mm.
know. Um, but when you do that, you create more vulnerability for oneself, right? When a founder does it, they can create more vulnerability for themselves because that most powerful piece is very valuable to the overall game that they're playing, and that is open to attack at that point. So instead, what I try to do is I try to work with founders to shift their mindset from what Silicon Valley has marketed so well, and it blankets the founder community with this illusion, um, and that they create a pitch that it's the YC epidemic, so to speak. I'll call it the Silicon Valley epidemic, where creating a pitch deck is and then raising capital is kind of like you know uh,
Holy Grail.
the SOP in terms of what a founder is supposed to do, and helping them understand that there are ways to structure this. Maybe a safe instrument's not the first instrument that you should go after. Maybe equity is not the right kind of capital. Maybe you need a little bit of debt before going after equity capital. Maybe you need more of a hybrid structure. There's plenty of non-dilutive capital opportunities out there as well. Perhaps pursuing some of those things and protecting your cap table from getting diluted. Be- And so that's the gap, is the lack of understanding associated with the need for capital. And it's not investment capital specifically. It's capital generally that a founder needs, and whether that comes from grants or customers,
Yeah.
capital is capital at the end of the day, and preferably non-diluted capital is better. So working with them on strategies to do that instead of just saying, no, you're not a fit for my investment thesis. Right. So more of a venture studio type of
Yeah.
approach, and just kind of reframing um how they view institutional capital, but also making them much, much more aware of how the capital markets work holistically and both in integrated fashion, right? Because um, we're equity investors, but there are banks out there as well, and at some point you're going to need some traditional form of debt or investment or line of credit, et cetera. So working with them to set those structures up from the very beginning and not just relying on equity capital until you're so diluted that you can't even get debt,
Yeah.
right? So it's all about laying down the foundation. And then on the investor side, you know, I think there's a lack of understanding with the bar to entry for VCs has been lower. Like it's below sea level. It's that low. And
So,
so
Paul, how long do you think it's been? Like, has it been gradually lowering? Like, has it like, yeah,
gradually,
yeah,
yeah, gradually. It used to be, you couldn't get in a VC. It was a who you know type of thing. But now,
anyone?
there are labs out there to help people start VC firms that probably shouldn't be starting VC firms, Um, and so that's what I call, just because you can raise capital and start a VC firm doesn't mean you should be a VC, or that you should be running the firm because um, y- you're going to end up deploying capital into companies, and that capital is going to do more of a disservice to those founders than it's going to help them because as a VC, I really have to think about um, the founder's perspective and not just my perspective. So I don't care how good the market opportunity is. I'm not going to get caught with hype and FOMO. If I can't bring muscle to that money, like if I can't support the founder, if I can't help them gain customers, if I can't bring in additional co-investors, if I don't feel that I'm aligned enough to do that, then I'm the wrong VC to be sitting on the cap table. I don't, no matter how good the opportunity is, because when I become a part of that cap table, I then become a part of that due diligence. When we look at exit opportunities in a private equity or later stage rounds like Series B and C, I then become a part of that due diligence. And, I want to make sure that these founders are positioned from a corner of strength, um, so that I don't have to put aggressive terms in my closing documents, and I don't need to put 2x or 3x liquidation preference. I don't need to do that because I've de-risked the deal because the founder understands how the capital markets work. They're going after the right capital with the right structures for the right reasons.
I love that. It's so unique, Paul, because it's all relationship building that you're talking about, and you called out the foundations and the due diligence that you apply to how you establish your partnerships, if you like. Tell us a little bit about obviously you've had a very successful and quite confronting military background in terms of being in the Marines. And, you mentioned to me quite a few weeks ago when we caught up, there was, you've got a whole story there and no need to go deep into it. I guess what I would love to understand, if it's okay with you, is, what you took from the military, your military career, and how you've applied that into what you're doing now, because you went from what I understand, you went from military to corporate and now into what you're doing. And I know that your military background has shaped how you evaluate the people, the systems, the risk and decision making under pressure. Also, the relationship piece would play a key role in when you were in the Marines, and that team, from a team perspective. Tell us a little bit about that and what the synergies, similarities are, and also what the fresh perspective has brought to you from coming from the Marines into what you're doing now.
Um, you know, I think uh, from a mindset standpoint, at the end of the day, um, I think life and every decision that we make in life really comes down to two simple choices. Um, yes or no, do or not, or do or die. So well, we have that saying in the Marine Corps, do or die. But it's in layman's terms, in everyday terms, it's either yes or no. Um, and I think that's a really dumbed down way to look at everything, you know? Uh, it's either do or do not, and just removing the complexity altogether from decision making, you know? So I think as an entrepreneur, you have to ask yourself the question, like, are you going to do what's necessary? Yes or no? You know it needs to be done. So get up and do it. And if you don't know how to do it, figure it out, and you have to organize and prioritize things, because everything's a priority, but everything can't be a priority. So
So true. So
yeah.
true.
So that means that, maybe you have 50 things that you need to do, but probably 5 are the most critical to moving your business forward for that day. The other 45 things can wait, So you have to prioritize, um, and you have to, operate in a very, um, in a very kind of automated, we talk a lot about automation. You got to automate yourself, to a point where, the habits the good habits outweigh the bad habits. And so in the Marine Corps, we talked a lot about, we had speed intensity beat into our brains. Speed and intensity in everything that you do. Um, and you don't belabor over things, because belaboring over things can get you hurt in combat, So you keep the fundamentals, and the fundamentals of business are sales at the end of the day, but what drives sales? It's not selling a product, it's building a relationship with your stakeholders at the end of the day, and doing the research necessary to understand, um, the psychology behind the vertical markets, and understanding how to improve things when people are going to fight against you, you know, and how to overcome that. So,
Mm.
and how the human understanding evolution, and just how markets evolve over time. Um, and I'll give you an example. I took a Waymo for the first time the other day. They've got Waymo driverless vehicles like Uber, here in America in like a dozen cities. And I took one I've been wanting to do this for a while. I finally said, I'm gonna take one. I didn't tell my girlfriend I was
Was it
taking one.
weird?
I didn't tell my girlfriend I was taking one, right? That we were gonna get in this thing. And so this car pulls up. I'm like, get in. And she gets in the car. There's no driver. I'm like, she was a little hesitant at first. I'm like, it'll be fine. Let's try it out. But she loved it and I loved it. And the thing is like, I know a lot of people that are really resistant to like these driverless vehicles. But you know what? I felt so safe. And the thing is like, we as people, as individuals, as business leaders, we we have to be leaders.
Yes.
So
So
so taking a Waymo when nobody else wants to do it is the leadership thing. You're blazing a path, right? Because the more people that take these Waymos or adopt these new technologies gives a chance for the technology to progress, which helps the overall society progress, right? So it's not about being, defensive, against new ideas, but it is about being cautiously optimistic, probably more optimistic than cautious, in adopting these things. And so, I think with regards to those things, the Marine Corps taught me a lot about that. It taught me the value of integrity. We don't talk a lot about integrity and ethics and principles, when we're doing business, right? But I think it's very important, and
do I.
we invest in people, not products. And I just got to work with founders that can pivot, because I get a seed stage founder talking to me about what they're building, and it could be completely different in 5 years. So it's really the founder's ability to like execute under pressure, um, to do or do not, to deal with failure, to maneuver, right? But also to have integrity and take accountability for oneself, and to be totally transparent about that. So, and that's where we get back to like diligence, right? And disclosure being one of the most important things about diligence, right? And so, the Marine Corps taught me that. It taught me and gave me a fighting spirit, and as an entrepreneur, they say business is war. So I think it correlates.
It is some
Um,
days, don't you think? Like, it's a war against yourself,
it
even
is
as a
a
founder.
war.
It's some days, like, you're like,
It's,
you're
it's,
battling, and you're like, can I make it to the finishing line? Like, I was having one of those
yeah.
days actually yesterday. I don't know what I do. I just felt like I was just overwhelmed with, like, coming right back to what you were saying around priorities.
Mhm.
And then what I did is I just basically went through my own methodology, my own formless methodology, looked at what was not serving me, subtracted that, went and thought about, okay, what are my 3 actual fundamental things I need to get done today in terms of
Absolutely.
priorities? And sometimes the priorities we think are the priorities is not the priority. It's like a mundane. And yesterday, my mundane was looking at every single tool AI tool that I was engaging with to go, this is overwhelming me. I need to simplify the shit out of this to get it more efficient, to make it more automated for me.
Hmm.
And so that's what I did for 2 hours. And it actually solved half of the overwhelm I was facing yesterday, because I was trying to do everything and I was just going, you know what I mean? Like, and I think that sometimes some of the most basic things as a founder are the most critical things we have to solve sometimes in a day.
Absolutely.
Mm,
Absolutely.
mm. So, Paul, tell us then the last couple of final questions for you. You know, you talk around this forcing of clarity. Tell us a little bit about that. Like it's not about simply chasing momentum. We should expose the risk, force the clarity. How do you force clarity with your founders? Like, is force is such a strong word, right? Like, it's not something that force can be quite strong in terms of, it can become across as aggressive. How do you get your founders to find the clarity?
Um, so it's by asking the right questions, number one. Well, that would be number two, but number one, I would say ensuring that I'm dealing with, um, valuable people. You know what I mean? So, how do I say this? So I need to work with someone that's scalable. And what do I mean by that? I mean that when you first meet a founder, or anyone for that matter, but in this conversation we're talking about founders. So when you first meet a founder, generally speaking, they're putting their best foot forward. But if you're if you come in up here, then it's harder to go up here, right? And then do you know what I mean? Like if you come in at level 10, then it's harder to get to like level 12 or 15, right? In terms of performance, in terms of credibility, etc. So I recommend coming in at ground zero. Tell me all the bad stuff. Let's get that out of the way, because I'm gonna find out anyways, you know. And so that's why disclosure is so important. And then we can build from that, right? Um, and I've never hidden, my mistakes. I had a DUI in 2013, for example, right? But I'm not ashamed of that. I improved my life, right? Like I didn't make that mistake again. So it's nothing that I'm ashamed of. I've done so many good things after that, right? So I think it's about mentioning, and I will always disclose that, by the way. Whenever someone's investing in my fund, I will always tell them, hey, this is who I am. It doesn't matter if it was 10 years ago or whatever. Like, you need to know like the major mistakes that I made in my life and how I've improved from that, and how that is going to translate into me, being a better person
Yes.
from here forward, but also being an effective, and capable business leader. So I say that people are generally not scalable, because, and this is why we say people are liabilities on a company, right? Um, because they're not scalable. So people put their best foot forward, but then when someone gets hired, generally speaking, their performance doesn't go up; it goes down. So I need to figure out ways that I can work with people that are scalable, right? That people that are scalable. And so where one reaches their own limitations, they need to be able to build other leaders. That is scalability,
Great.
when you can build other leaders in your image, right? And then they can go out and do other good things. So I need people to be scalable. Um, I don't need a great story and then a bunch of problems after the fact that I didn't expect because we led off of this great story. And I need transparency there. Um, and then I would say, um, the the overall then we start looking at the market opportunities, um and what we can do together. So but I really want good people on my team, because I've seen I've seen people that like use money as a weapon,
Mm.
and they just try to create as many problems as possible, um or they try to manipulate agreements and this and that. And so like um we need to figure out, make sure we can figure out, how to work together when things don't go as planned, because they're normally not going to go as planned.
No,
And
totally.
yeah, and then like, you know, put throwing each other into the fire because we're unhappy with how the deal worked out doesn't do anybody any good. So I'm not here to do that to founders, and I know a lot of VCs can I take that approach, and I'm just not here to do that. If I'm getting on board with you, I'm on board with you, you know, permanently. Like, and you know what I mean? Like,
Yeah, I
I
love
want to
it.
do, yeah, I want to do this perpetually, and so going back to the Marine thing, there's a saying, once a Marine, always a Marine. So being a Marine is not a job. It's a way of life.
Mm.
It's a mindset, right? And so being an entrepreneur is the same thing.
Yeah,
It's a
totally.
mindset, and I want people to embody that.
Yeah. So amazing. This has been such a profound conversation, Paul. Good one for Friday morning for me. And yeah, I just love your whole energy, your vibe, and just your whole, yeah, what I can't think. Do you your disclosure of everything in terms of from what you see
Yeah,
in VC, and also what you expect and what you see with founders, and then your full disclosure as a person yourself, because there's a lot of investors, a lot of people out there that there's the reality of the founder and there's the reality of the investor, and sometimes the founder doesn't understand the investor and where they're coming from, and vice
yeah,
versa. And
yeah,
here you are looking at it holistically. One final question for you. You focus on AI native companies at the seed and Series A stages. There is tons of hype at the moment. Like, you talked around at the very start of the conversation that, I guess the revolution, if you like, and that, AI's been around for a very long time, believe it or
yeah,
not. It's like lightning speed at the moment. What are you seeing in terms of, like from the companies that you're partnering with, if you like? And I guess for me, it's probably not what you're seeing. It's like, what do you look out for? Because there is a lot of businesses that won't last a distance when it comes to, AI native companies. They're almost like there's going to be quite a lot of one hit wonders. We're probably still not yet seeing, the actual, companies that will last a distance.
yeah. Well, the the companies that are building today, uh, they might be successful for a short period of time, um, but they're not. I'll give you an example. So when we crossed over from CDs to iPods, right? Um, iPod was just an intermittent phase for about 6 or 7 years. And then somebody thought, "Oh, why don't we put music on phones instead of carrying around a phone and an iPod?" And we put it on phones and everything is here, right? And so it it condensed it condensed two needs into one, right? Because people started thinking foundationally, right? And so they started thinking about, you know, the fact that we have music on the go, but we also have a phone on the go with a device that resembles a phone. So they started thinking foundationally and where we could compound where and how we could compound technologies. And I think foundational companies are the ones that last. And so this model, has lasted
Mm.
a lot longer than iPod. And it's gonna last for probably at least another 15, 20 years before we have chips in our head and we don't have this anymore, right? So I think, the companies today that are AI wrapper companies that are building on top of pre-existing SaaS platforms, I think they're the iPods of our generation.
Mm.
And I think they're going to be successful moderately, like the iPod was, but I think they're going to be obsolete a lot faster.
Yeah.
And I think so. I think the picks and shovels and the AI native companies that are building stuff um, that has a real impact. Like that's the thing. You got to have picks and shovel like foundation, and then you got to have like AI at the core,
Mm.
right? And then third, it's gotta have like a real impact. Like an AI native dating app. I don't think dating apps are that big of a deal. Like in terms of needs and lasting perpetually, right? Like lasting generationally. So companies that will last generationally are solving real needs,
Mm.
like I don't know, cancer, the forest fires in California, voter fraud, and on and on and on. So that's what I think. And then when AI infrastructure or picks and shovels, then we get in the realms of like quantum computing, data
Yes.
centers, and so forth. And I just did a project. I just finished a project for one of the most well-known large language model companies in the world. I can't say the name; it was confidential, um, but you can take a guess. And It's an American company, and so I did a project for this company. And one of the things that I learned is that um, it's incredible how um, broken AI is at its core, right? And so because of that, we really have to be careful, how we're using AI and that we're being hard on AI, that we're holding AI accountable, right?
Mm.
And I'll give you one last example on that. I have a colleague that she referred to AI in the third person, right? When she was talking to someone. And the person that she was talking to was like, "You can't refer to AI as a person." And I said, "Well, I disagree. I think you should refer to AI as a person because, you know, like with cars, for example, we don't hold the cars accountable. We hold the drivers accountable.
Yeah.
And so you can only regulate cars so much, but we have Corvettes and Lamborghinis down here in Miami all over the place. And nobody drives 200 miles an hour, even though those cars are capable of that, because we regulate the drivers.
Mm.
Um, at the same time, we also need to um, hold the AI accountable as if it were an individual,
Mm.
because it will
Right.
become more individualistic, eventually more sentient, and it's going to become more human like. And so we have to train it to be accountable, right? As if it were a person or the driver
Yes.
of a Waymo that I took the other day. So
Yeah.
um, I'll leave you with that and let me know if you have any other questions.
Thank you. Excuse me. Thank you so much, Paul. I couldn't agree more. And I feel like we could go down a whole other pod conversation around
Mhm.
treating AI as a human, because for me, they're part of a team. And I think the more we
Yeah.
treat them like the team, and, everything we've talked about today, the need to the relationship that you're building with them, it's all of that. And thank you so much, Paul. I am going to leave it for now in terms of wrapping up, and I would love to get you back on at some point to have a further conversation. I would have loved. Did you take a photo of yourself in the Waymo with you and your partner at all?
Or in the Waymo? No, but I actually did a video on LinkedIn today.
Oh,
So
I'll
if
have
you
to
go
check
to
it
one of my
out.
recent posts that I made today, there's a video of well, facing the driver, the driverless car, the steering wheel, and we're talking in the
Very
background and
cool.
stuff.
Very
But
cool.
yeah, it's
And the
pretty
one
cool.
Yeah, so cool. And the one thing that really, you struck a chord with me was just that, in terms of from a leadership perspective, and for the audience here, there's been so many rich insights and I guess learnings from Paul today. I think right now as leaders, so much is uncertain and there is so much complexity, and there's just so much. There's not enough choice, but there's so much choice as well. And I think the one thing that you really highlighted in that Waymo experience in particular was that, leadership is around, trailblazing and pioneering and stepping into that unknown, even if the path is not clear, if it's not lit up. And I think that's really important right now, because we really do need leaders that have the disclosure, the ability to take the risks, the due diligence, everything you've talked about here today, Paul. So, Paul, how do we find out more about you and your businesses? Where do we go?
Uh, excuse me. PaulClaxton.io. That's my professional website that leads to everything else that I'm involved in. Um, different things that I'm doing, podcasts, my LinkedIn profile, and so forth.
Thank you, Paul. Such a great privilege to have a chat with you today, and we finally did it. So yay for that. So thank you so much. And look, have a great end of the week. And thank you so much. We'll talk soon.
Absolutely. Thank you for having me on your show.
You're welcome, Paul. Have a good afternoon.
You too.